I have bought my first ever property in Georgia. Over the past few years, I've analyzed and invested in markets all over the world, from Europe to Dubai to Asia and emerging markets. But when UAE capital, Dubai developers, and one of the most recognizable names behind the mega projects of the world all start moving into one niche market at the same time, that's when I pay very close attention. Because this isn't retail hype. This is institutional money, state-level agreements, and long-term capital making a very deliberate move. That's exactly why, after deep research, 2 country visits, and multiple conversations, I've bought my first property in Tbilisi, Georgia. Today, I'll explain why UAE-backed developers are entering Georgia, who is really behind the Tbilisi Waterfront project, how the first launch sold out in a single day, and why I decided to invest in the very first phase myself. We'll then take a closer look at the project, why I found it so investable, discuss the units that were available at the first launch, layouts, payment plans, and what's my prediction for this emerging market. If you like this kind of videos where we look into new markets, analyze real data based on my very own investment cases, then in return for my transparency, I'll be forever grateful for your support with a thumbs up and subscribe. All the content I share here is completely free, and your support is the ultimate incentive to do more. And as always, bringing you the unbiased truth in real estate, so hit the thumbs up button, subscribe, and let's dive in. So why UAE capital is moving into Georgia? Let's start with the bigger picture. In late 2024 and early 2025, multiple major international outlets reported a massive strategic investment push from UAE to Georgia. According to Forbes Middle East, Eagle Hills Properties, an Abu Dhabi-based developer, announced plans to invest over $5.5 billion and $6.5 billion, according to other sources, into large-scale urban developments across Georgia in Tbilisi and Batumi. This wasn't just a developer announcement. Gulf News reported that the investment followed an official visit from the president of the UAE to Georgia, where bilateral cooperation agreements were strengthened. Bloomberg also confirmed that Eagle Hills Georgia projects are part of a global expansion strategy, positioning Georgia as a long-term growth market. Arabian Business also highlighted that the agreement was signed directly with the Georgian government, signaling state-level backing rather than speculative private development. This matters because government-to-government alignment reduces political and execution risk, something investors often underestimate. So who's actually behind this? Now here's the moment where everything clicked for me. When you hear Eagle Hills, you might not immediately think Dubai, and definitely not Georgia. But then you see this. Recognize it? That building wasn't built by a random company. It was developed by Emaar Properties. And the founder of Emaar is Mohammed Alabar. Mohammed Alabar is also the founder and driving force behind Eagle Hills Properties. So when my friends and people around my smaller inner circle ask me, why did you trust a new mega brand project in Georgia? My answer is simple. This isn't a new developer. It's simply Dubai experience exported abroad. What is Eagle Hills? Let's ground this properly. According to public records and even Wikipedia, Eagle Hills Properties is an Abu Dhabi-based developer founded in 2014 and is focused on waterfront projects, large-scale and mixed-use master plans. Rings a bell? Very similar to the Emaar master communities. It's active across Europe, Africa, and the Middle East, and it's known for really city-shaping projects, not simple, small, speculative developments or just a standalone building. Basically, it's Emaar abroad. Their model is very similar to what we've seen succeeded in Dubai. Long-term urban transformation as a whole, mixed-use districts, and most importantly, strong government cooperation and infrastructure planning. This obviously isn't a flippant exit developer. Well, sometimes it might be, but it's not the point. This is real placemaking capital. Now, let's talk about the project itself. The Tbilisi Waterfront is one of the largest urban regeneration projects Georgia has ever seen. Some of the key facts reported by Construction Week and Business Insider Georgia show that the project is structured as a public-private partnership. Ownership is split two-thirds by Mohammed Alabar, the founder, and one-third by the Georgian government. Official extracts from the Ministry of Justice of Georgia confirm this. This alignment means that the government is financially invested in the project's success. With planned investments exceeding $6.5 billion, Tbilisi Waterfront is one of the two planned mega projects besides the other one, which is in the city of Batumi and is called Gonio, Yachts and Marina. And according to officials, the development will include 16,000 new homes, apartments, townhouses and villas, and also hotels with over 1,400 rooms, as well as commercial and recreational areas. The project's location is also really interesting. Krtsanisi Park in Tbilisi, Georgia, is a 200-hectare protected forest area established in 1958, known for its biodiversity, hiking trails, and picnic spots. It's also home to the Ponishala Reserve, which is a famous birdwatching spot. The official sources claim that the project will generate over 30,000 jobs during and after construction, with the work expected to be carried only by local companies. The government also estimates that the project's direct impact will be within around 11 billion Georgian lari, which is around $4 billion US, plus hundreds of millions of Georgian lari in annual taxes, and a pretty good average annual profit for the government because they are one-third owners. According to Mohammed Alabar, 60% of the project it was intended for international buyers, including from investors from the UAE and Georgians living abroad. But here's the part that really stood out. In the very Imar fashion, the first residential phase sold out in one single day. According to Construction Week Online, the buyer demand was overwhelming. However, it was interesting that the 60% approximate of buyers were actual Georgians who were preferring this project, not just foreign investors. This tells you two important things. This isn't purely speculative foreign money. Local confidence in the project is extremely strong. For me, that was a very critical point. So why Georgia now? Well, that's mainly because the capital is rotating from the saturated markets. London, EU capitals, and even Dubai. Investors obviously are moving in at the earlier stages, not at maturity. Georgia is still in price discovery phase, not price inflation phase. That's a similar pattern to Dubai pre-2013, however, in my opinion, might be even pre-2021 before the COVID actually took the hit, or even Lisbon pre-2017. This positions you as a cycle investor, not simply a deal chaser. And while many will say that Georgia has already seen some really interesting FDI numbers and real interest from international buyers in the few past years, it is still discovering, and there are definitely more people finding out about this market and really looking how they can diversify their overall emerging market portfolios. And that leads to why exactly I was looking into this market. Because as a property investor, I'm always curious to see what is going on in the world, which markets are at those early stages, the opportunistic phase where you can actually get in very early and take your risks, of course, and see maybe this will bring you better returns than in any of the saturated markets, including Dubai. And while I'm not saying that I'm stopping investing in Dubai, no way, Dubai is definitely my first number one choice. I am still looking into diversifying the capital and trying to see how I can make it grow. In my personal opinion, Dubai is still the best spot and the perfect place for cash flow investment. So if you want to have some real cash flow, some money that will fund your living, for example, and live off those investments, then right now Dubai is the king because the rents are really high and you can really generate very stable, very high yielding cash flow. However, if you want to actually multiply your net worth, grow your capital, you have to obviously take risks. And that brings me to my personal decision to invest in the phase 1. So why did I do that? Well, because generally, first phases historically offer the best risk-adjusted entry. Pricing reflects the vision, not completion hype. You benefit from the infrastructure delivery over time, and you align yourself with institutional capital, not against it. So in one sentence, I didn't buy because it was cheap. I bought because the capital behind it was serious. The structure was sound and the upside is asymmetric. However, the key 3 turning points for me were first, the payment plan. That is like in the golden days of MR, with only 5% down payment. Number 2 is that the project is government backed. So while at the beginning I was looking at projects in Georgia, I wasn't really sure which ones would make sense. This one stood out because I knew that the government has an interest as well, so it really makes sense. And finally, I did my research and I looked into Quarter.g and some other sources where I could compare the price per square foot, and I realized that this is an emerging market with a very good and realistic price per square foot versus the ready options that are already available. On top of that, there is really limited supplies for townhouses and villas. But this, we'll talk about it later when I tell you exactly what I bought. Finally, developer execution track record was also very important to me, beyond all the branding. And also the government joint venture reduces the executional risk. So first, let me give you some information on the payment plans, which was the number one thing that was a turning point for me. So if we look at the payment plan for the apartments, then you have 10% at the booking on pre-sale, and that was for January 2026. Then you have another 10% on signing the contract, which is in just 12 months on December 2026 at the end of this year. Then you have another 10%, which is June 2027, and the fourth 10% payment in December 2027. So a really, really well-stretched payment plan over 2 years. And the project was planned for completion in July 2029, and that's why upon handover, you would be required to pay the remaining 60%. So really, as you can see, it's MR in the golden days. Most interestingly, in the cases of villas and townhouses, the first payment would be only 5%. So 5% booking on pre-sale in January 2026, and then 5% on signing the contract. So really, your first 10% payment will be throughout 12 months. And in total, it would be 3.5 years. It's a really well-stretched payment plan. Now, if we look at the project master plan, then we can see that the first phase that was on sale on launch this month included apartments from 61 square meters to 240 square meters, from 1 bedroom to 2 bedrooms to the largest one would be the 3-bedroom apartment. Besides that, there were also townhouses, one for 3 bedrooms at 215 square meters and another one at 277 square meters, which is the 4-bedroom one. Finally, we also had villas, which started also from 3 bedrooms to 4 bedrooms, and the largest mentioned villa would be the 6-bedroom one, and that would be from around $1.1 million. However, I'll get into prices when we speak about that and compare with the actual market prices. Now, I also want to touch a little bit on the project delivery and what's included in that. In comparison to many European cities and the Western world in general, this project will actually come almost fully fitted, which means that it won't be gray or white delivered, how we like to call it in Europe, but would actually include the floors, the walls, the ceilings, everything would be finished. You would also have the kitchen done properly as well. I mean, the only thing you actually need to install the stove and so on, that would be extra, of course. But also for the bathrooms, you would have the floors, the walls, the ceilings, everything would be done. The sanitary ware also is included, high quality sanitary fixtures and fittings. Some of the things that won't be there is the air conditioning, the water heater, and the kitchen appliances and cupboards, wardrobes, and so on. Those won't be included, but you can see that everything is really done except the kitchen and the wardrobes, which I've done some research and I asked around and I realized that the kitchen would be around $5,000 to 3,000 Georgian lari, which is about $2,000 to $3,000. And the wardrobes and the water heaters, those would be up to 3,000 Georgian lari. So not a really big investment. Basically, the price that we would be paying for this is actually kind of fully finished. What I mean by that is that we won't really have to put the flooring, to think about wallpapers or coloring the walls and so on. This all will be completed, and even the doors, everything would be installed. And I mean, for those who are watching this and don't know about the UAE market, that's actually in real fashion of the UAE market. Usually when you buy off plan in Dubai, Abu Dhabi and so on, this is how you will be receiving your units. Sometimes they even deliver it with fully fitted kitchens. So while in the Western world this would be considered probably fully furnished, in our world here in the Middle East, this is basically the basic minimum that they would be delivering it. Now, if we speak about the pricing, this was actually the most complicated part for me, and that was mainly because when I was really inquiring about the project and getting the contacts in and so on, the prices weren't even set up yet. And that is because it's super early. At the time when I really got in and started talking to people and so on, they weren't even ready for the pre-launch. So what I got for the prices, I will give you as a general outlook, is that they told us a range for every single type of apartment. So a one bed would be within around $115,000 and $145,000. A two bedroom would be in around $175,000 to $213,000, and a three bedroom would be $260,000 to $300,000. So all these prices would range according to the actual view, the location, if that's a corner view, or what is the actual floor. So obviously, if you want the last floor corner unit with a nice view to the river, then you probably would expect to pay the maximum from that range, and accordingly you would pay for the others. The same happened for townhouses and villas. So for three bedrooms, the starting would be $350,000 and the maximum would be $387,000 for the three bedrooms. And then for four bedrooms, we have a starting of $499,000 and maximum of $545,000. And for the villas, we have small, medium, and large villas. And we see that the maximum for the largest mansion villa would be within around $1.25 million. So on the day of the launch, they actually had the full list price with the actual pricing for every single unit. They were very different for every kind of apartment, so I don't actually have this one to pop it on the screen. But for the unit that I chose, let's get into this and let me tell you what I paid and what I actually chose. In this deal, I went in alongside my investor partner, so we all together bought a couple townhouses at the price of $1,700 per square meter. And that was for the three bedroom townhouses and ended up being at around $368,000. For me, I felt that this is a pretty good deal, especially considering the payment plan, which is super easy and very stretched. Also considering that when looking up for townhouses and villas in around Tbilisi area and outside, there wasn't really much available, and anything that was available was at around $2,700 to $3,000 per square meter, which is already $1,000+ more per square meter. And if you do the maths right, for a three bedroom, which is 215 square meters, if we multiply this with 1,000, which is the margin, that's literally $215,000 over what we were offered. So again, I'm not saying that this would be the reality that we will sell at that price. I'm not even saying that we will even sell it. I might even like the project. Maybe I'll consider it being my second home. We'll see. However, I did, of course, plan for the exit strategy. As I'm saying in all my videos, this is something that you really need to be aware of. You really need to know the numbers, and you need to know what you're going to do with your investment. Every serious investor needs to know their exit strategy. For me, it was very important to know that local buyers also want to invest in this project, which means that in case I want to resell it, I know that local buyers will be interested. Also, end user versus investor demand, that is very crucial. That's actually why I went for the townhouse and not the apartments, because I knew that most probably the buyer or the end user will be someone who wants to relocate from downtown Tbilisi and want to live somewhere outside in a nice community, and most probably will target a townhouse or a smaller villa. So when do these exits become really liquid is when the phase 3 or 4 is done, the infrastructure is completed, and that's when exactly you can not only target the resale buyers, but also you can target the end users who want to buy it from you. Maybe they even get a mortgage from the bank and move into that property. For me, that was a real exit strategy that I was targeting. That's what I analyzed, and I felt that the price point at this entry stage also versus what they will actually deliver, considering that everything is finished, makes proper sense. Now, who this investment is not really for? Definitely not for short-term flippers, which I have a feeling that there were many who were looking into that, but I would say with all the investments, you need to at least allocate about 2 to 3 years just in case to understand that you're actually able to pay for those installment plans and that you're not going to miss out on any kind of payment. Definitely not for investors who need immediate cash flow because it's an off plan, so you need to wait for the actual execution and delivery of the project before you're able to rent it out. That's why in this case, it wasn't really my strategy for rentals. That's why I didn't really look into that kind of exit strategy because, as I mentioned in this video and in previous videos, I think the best cash flowing area or city overall now is still Dubai. And that's why another point is that this investment is not really for anyone who's not comfortable with emerging markets, because emerging markets are the ones that will give you the X2, X3 returns, but will of course also require some execution risk and your kind of risk to lock in the money and wait for that project to be completed. Why didn't I go all in into this project? Because many might ask, I mean, if it's 5% down payment and another 5% in 12 months, maybe you wanted to buy more there. Well, for me, portfolio balance really matters. Portfolio sizing is definitely overweighting the conviction, and this is a satellite investment, not the core holding. For me, discipline always beats hype, so I try to be rational and to understand what kind of investments I have for long term, which are riskier, which are less risky, and which are basically doing what for my portfolio. Are they actually increasing my net worth, or are they actually for capital appreciation or for cash flow? Nevertheless, if you're still watching right now, chances are you're not here for the hype. You're here because you're drawn to hidden opportunities, to understanding things earlier, thinking independently, and acting before the crowd wakes up. From the very beginning of my property investment journey, one thing which I'm the most proud of is learning how to spot opportunities that others either overlooked, dismissed, or simply couldn't see the potential in it. Yes, I took risks, and yes, I'll be honest, luck played a role too, probably more than I once thought I deserved. But as I wrote in my recent post on this channel, you need to ask yourself when the luck stops being just luck and starts becoming a skill. That skill of pattern recognition, timing, discipline, and understanding the cycles is exactly what I try to share with you in here, open, honestly, and without selling you the hype. Everything on this channel is absolutely free, and I genuinely hope that you share the same passion. And if this video resonated with you, hit that thumbs up button, subscribe, and stay tuned, because I'll be updating you on this project as it develops, also about the new phases. Maybe you are interested to get in. Also reach out to me because I can help you get the most up-to-date direct information from the developer. By the way, that's not an integration. I really put my money down, so I have nothing to do with it. But nevertheless, stay curious, invest smart, and as always, bringing you the unbiased truth in real estate. I'll see you in the next one.